What's up, everybody? Chris Dover here, head systems trader at Macro Ops, and recently live streaming aficionado during the trading day. I've been on the channel. We've been going live during the trading day to kind of cover what's going on in the markets, and I'm going through a lot of price action. And actually, we spent some time this past week while the market was crashing. I think I trail stopped my longs. And then I did like one trade on Friday at pound, but I kind of want to come back because I haven't done one of these videos. It's mostly just been live streaming for the last couple of weeks to update the move to the new office here. Well, it's the home office here in Scottsdale, Phoenix, Arizona. And one thing I did is during the live stream, I talked about prop trading, and today I'm going to talk about that too. So before anything, like, subscribe, get notified, follow me on Twitter at ChrisDMacro, go to chrisdover.com, and that's where you'll find a bunch of my other blogs, videos, the free checklist, and then also at macro-ops.com. Okay, so let me talk about prop. So there's a couple of different ways to get into prop trading. I'll talk about the ways that most people think about what prop is, and then there's a few other ways. And now, like, prop trading has always been the big banks where you get hired out of business school, and they give you a portfolio, and you go and you trade on the crude oil or the bonds or something like that at a big bank. Nowadays, most of that is being done by programmers and developers. So a lot of the big prop firms have all gone to algorithmic trading to generate returns. And so if you're a developer and you have some pretty good math skills, that might be an interesting way for you to look to get into prop trading. Apply. Maybe especially if you've been pedigreed. With computer science at MIT, maybe you're a doctor in physics or something like that. They're looking to hire you with big salary and then big bonus programs and all that sort of stuff. It's less like a trading floor and it's more like a Silicon Valley dev shop. That's the best explanation I can say. There's a number of other ones out there. There are market maker firms. There are you can trade allocations from big places. A lot of it has to do with pedigree, who you know, what schools you went to, living in the country, being a resident. So I know I have a bunch of South American friends in here and Europe friends. If you're in Venezuela, trying to get a job in Chicago at a dev or New York or New Jersey at a prop firm is kind of hard. Because, then you have to deal with getting your visas and all that sort of stuff. So all that, all those exist. And I'm not going to talk too much about that. The next thing I'm going to talk about is the ways that people from, let's say, Venezuela, from Colombia, from Spain, from, who else have we been? Singapore, Slovakia. Like, we've been having a bunch of international people in here. And I actually, full disclosure, I am a prop trader myself. I've been prop trading I got into trading back in 1999 as a prop trader. And I've been going back and forth between, my own stuff and trading with a prop firm. But I've been trading Forex at a firm called Maverick FX. And recently, let me just throw this out there, I'm now a mentor. After trading with them for a couple of years, I'm now a mentor at Maverick. So if you do join up with Maverick, you very much likely could be working with me. And why do I like Maverick is they're a meritocracy in that, and a lot of the firms that I am aware of and that I think are useful are meritocracies. That is, if you can trade and manage risk, there's an account for you there. The way Maverick does it is, I think you put up some capital, a couple $1,000s, and they run you through a training course, and it's remote, so it's all online. You don't need to, fly into the offices or anything like that. As long as it takes you to get through the program, you have it. you have access to it. And then, once you've gone through the program, then you reach out and you say, hey, I've done the program. I'm ready to go to level 1. And then you build your trading plan, and then you'll get a demo account, and they'll have you paper trade that account for a couple of months according to your plan. Now you can reach out to the mentors and kind of get coaching along the way, but what we're looking for is this is the important part of if you want to get into prop, how you manage risk. Okay, it's not that you can make 1,000% on a single trade unless you can do that consistently, like nonstop for months and months and months on end. That's rare, and as unicorny as they come, it just I've not seen it. But what we're interested in is you could finish demo and still come out negative on the account. So we're not always looking for big winners. We're more interested in when something goes wrong, how do you deal with it? When you're in a 2 or 3 month losing streak, and they happen, you may have built the best system out there and back tested and all that sort of stuff, and then you go and look at it and you trade it live, and it's just what was done in back testing and on paper going live, you just weren't able to execute on it yet. So you got to keep building those skills. That's one. Or two, it was just a drawdown in that strategy, and that happens a lot too. So how do you deal with it? Are you taking 2, 3, 4, 5% losers? Or are you getting, the 1%, 2% losers that you should be getting? That's important, okay? It happens. You can go on tilt a little bit here and there, but being able to not take those massive losers is really, really important. And, taking the correct losers according to the math of your strategy is absolutely what we're looking for. So, again, I work with Maverick, so this is the stuff that I'm interested in the traders that I work with. It's to see that you are, you can say exactly what happened here, why you took the trade. Is it the same trade you always take? Did you just take it because the market was ripping and you wanted to chase it? Maybe that's your strategy, and you're able to read the markets better than other people. That's fine, but you better be able to show that over and over and over and mathematically prove that it is a viable strategy. So that's one of the benefits of being a mentor here, is that now I'm starting to talk to new traders and traders who've been in the game for a while who have different strategies. And they do things differently than, let's say, the way I do. And so I get to see their strategy, I get to learn from them, and then I get to do all sorts of stuff. All right, FedEx guy just arrived. I love being in the same place where I could just be, boop, Thrive Market, bring me food. I wish I was sponsored by Thrive. So then your job is to try out and create the plan, follow the plan, and then get on the phone with us and go over the plan and say, okay, yeah, you're good. Let's take you live. And we warn everybody, once you're live, things get a lot more real. So as you were really, focused in the beginning on demo, now towards the end of it, you're just kind of I got this. And then suddenly real money's on the line. You're like, ooh, so ease into it. If you have, a position said $10,000, you do 1,000. You just get comfortable with it. And then you'll just work through it. So as these markets are in total chaos, you'll find that a lot of the better traders are just not doing anything. And a lot of the newer traders are constantly, there's this huge move, so they got to get in on it because this is where the big amounts of money is made. The reality is the big amounts of money is usually lost here. So try to be a little more cautious with that. Then let me talk about the economics of, let's say you're sitting here, you're like, dude, I've been trading for 10 years. I'm good. I can make 50% every year. No problem. This is what I do. I made 200% last, all that, right? Why don't I just, why wouldn't I just keep trading my own account? Well, cool thing about prop is you're going to get matched. So if, let's say you have a $100,000 account now, you go through the prop program, they'll match their 100. So you now have a $200,000 account. Plus you get a little bit benefit on commissions and fees and all these other things that you were, paying for individually. Plus when you have an issue, now you're represented by the firm. So instead of you calling up customer service and saying, hey, this is Chris, and well, I'm having a trouble with this trade and I don't really know what it was, they're going to be like, oh, cool, Chris. Yeah, I don't know what's going on. Or you call the firm and you're like, hey, I had a bad trade. Something happened here. Something's a little wacky. I don't know what's up. Can you handle it? And they get on the phone with Interactive Brokers or whoever they're working with. And now you have a big firm with a lot of money saying, hey, this is a problem. And they're like, okay, yeah, we're gonna go after the problem because you're making it a problem, right? So there's some benefits to that. Also, you may be thinking to yourself, man, I've been making 50% a year for 10 years. Why don't I just run a hedge fund? Not a bad idea, but let me talk about the payout of prop. So if you make, the split on prop is like 70-30. You take 70% of the profits, or even 80-20 if after you've been there a little bit and proven yourself, and they keep either 30 to 20% for the firm. Okay, so think about that. That's like, as a hedge fund, on a $100,000 account, you can't really do a hedge fund. On a $100,000 account at a prop firm, and you make 50%, that's and they doubled it, so that's $200,000 account. You make 50%. It's $100,000 minus 20 to 30%. So that's either $70,000 to $80,000 that you had. Otherwise, you would have made $50,000 without any of that support on your own on a 50% on a $100,000 account. So you're just leveraging it up. Where if you do a hedge fund, in order to take home $100,000, you got to do like, I think $10 million. Is that right? Somewhere around there. Anyway, if you're taking 20% of the profits on, let's say, a $10 million account, $10 million account, you make $5 million. 10% is 50,000. 20% is 100,000. Okay, so you need to raise $10 million, and so now you have 5, 10 investors, one investor, whatever it is, you have to go and manage. And then you have to do compliance, you have to do reporting, you have to do, when they call, you have to answer their phone call and, tell them what's going on in the markets. You have to go out and visit them. You have to have accountants, you have to have attorneys, you have to have all that legal structure so that, $100,000, $200,000 profit that you made gets cut in half pretty quickly. And then in addition to all the headaches you have, you still have to trade. You still have to make money trading. So when you go prop, you just, $100,000 account, you're right there the same. So unless you're doing like $100 million hedge fund or $1 billion type hedge fund with, a staff of 20 people and, a payroll of like $1 million a month or something, unless you're going that route, it doesn't really make sense financially to go hedge fund until you have like at least $100 million, if not more, in assets under management. Whereas you can come into prop with 100,000 of your own money and get that doubled up. Then here's the part that makes it really cool too. So one, you're not doing all the phone calls, compliance, any of that sort of stuff. You can run it as a business. You can form a LLC or a C Corp or whatever, and that entity could trade the money, and then you're an employee of that firm or whatever like that. You can still do that sort of stuff. You can also, maybe do an agreement that you like put in 100, a friend puts in 100, a couple people put in some money, and then the firm matches it once you've completed it and you get brought into their asset pool or their capital sharing program. So this is also the thing that makes it really, really cool, especially if you're just starting out. Let's say you don't have $100,000. Let's say you only have a couple thousand, 5 or 10,000. If you go in, do the program, manage your risk, make money, all you have to do is stay above your high water mark, even by $1 for a couple of consecutive months, they'll up your chip count. So back to that $10,000 idea. You go 10,000, you do it for a couple of months, you make your salary, you make some, let's say 5 or 10% a month, and you manage risk, and you end up, higher at the end of the month. So it's 10,100, 10,000, I don't know, 10,500, 10,000, 12,000, who knows, whatever it is. Like, you're up. You take that back yourself, or you can keep it in the account, whatever you like. You don't have to take, what I do is I just wait at the end of the year and then I take a disbursement for what I need. But then if you're profitable, they're going to go ahead and give you a little bit more money. And what does a little bit more money mean is bigger buying power. So if you're at 5%, making like 3 to 5% a month every month, and you're managing risk, you're not losing too much. At the end of the month, you're there, you're sticking to your plan. Within a couple of years, now think about this as a future. You start with 10,000, you could be trading 100,000, 500, $1 million of their money. You can even, like once they're good with what you're doing, the risk is going to be, a lot of the risk is going to be on the firm because you've built a relationship with them. And so they're going to keep giving you capital to work with. And as long as you keep making them money, they'll keep, of course, if there's a profitable strategy with low risk and a manager, a trader who knows what they're doing and, can elucidate what is happening. And, when they have drawdowns, they're like, yeah, this is a drawdown. This is no fun, but this is it. If you can do that sort of stuff, then yeah, you could be managing. Think about this. If you're doing $1 million, now $1 million in a hedge fund, making 50% is $500,000, 20% management is $100,000 profit, right? Whereas if you're doing $1 million in prop and you make 50%, $500,000, 80% of that is yours. So you walk away with almost all of the capital that you earned for that account that year. You get there just showing up every day, doing what you need to do, trading 222 days or whatever it is, 250 days out of the year. It's easy. Now, what I suggest, if you are going to do this, first of all, I have a link down below with my name on it. So if you sign up with that link, they'll know that it came from me. And so we'll be able to work together in the future too, because it came from me and they know that, oh, okay, this is Chris's type of trader. So having a strategy built that you've manually back tested, done the work on, you have the statistics on, your job is to simply manage it. Now, if you have a full-time job or any other thing, this sort of stuff is like really cool because you can spend 10 or 15 minutes a day doing your swing trade stuff like I do, and then the rest of the day doing other things, working your other job. And then, let's say you have a plan 2 or 3 years to be full-time trading or getting compensated in a full-time way, and you continue to work your job now and build up your savings account and continue to grow. That's a super cool way to do it. Anyway, reach out to me if you have questions about that. Again, the links down below are going to be the links to trade with Maverick FX and the options program. So if you're not into FX and you want to trade options, you can get into their equity pool as well. They have a whole different training program for options. And then also, when you get into the firm and you start working, they'll give you, they have other accounts, futures and whatnot. So anyway, that's it, guys. Trading Thunderdome is there. My stand-up desks, my monitors finally. I've got 2 laptops, 3 big monitors, and it's kind of enjoyable. Not big, not huge monitors. They're tame, but anyway, love you all.